January 22nd, and this is, of course, your daily financial news. If you don't know already, something we do every day, actually, it's 6 days a week at 7:30. We do this live show. I basically spend an hour to 90 minutes kind of reading about what's going on in the markets. And I take a bunch of notes, as you can see right here, and I just kind of share my thoughts with you. To appreciate my thoughts is to understand that I've been looking at the consumer my entire life, studied economics in school. And as an economist or someone who studied it, I believe in what is called demand pull economics versus cost push. Really, the consumer is the driver of the engine. And if you can figure out where they are, you can make some investing decisions. So that's my filter. That's what I look at. If that interests you, do yourself a favor, hit that subscribe button. Again, we do these live, no editing, no whatever, no YouTube tags or whatever those things are called. We just talk, kind of hit done after 12 or 15 minutes, and all of us go on with the rest of our day, which is pretty awesome. If you do subscribe, be warned. I also interview multimillionaires Monday through Friday. Those videos are published, plus share with you what I'm doing in my business. In short, I produce a lot of original content. None of it's edited. It's all live and then uploaded. Or actually, it's all live or recorded on Zoom calls and then uploaded with no editing. So as we get ready to talk about the daily financial news, I want to let you know about a couple of things in my course. The private money section is already growing. As promised, I uploaded my 6 and 20 note. This is something I have used to raise multi-millions of dollars in the last couple of years. It allowed me to get partners who were excited to be a part of the flip journey. They took a lower interest rate, significantly lower than hard money, and they just participated in the upside. A lot of you have asked for it, so I shared the note with you. As I say in the video, this is something I spent thousands of dollars creating. It is obviously for California as a trust deed state. But it does give you the framework. It does give you, what I use. So maybe use it as a guideline. And again, that was loaded last night. If you are one of my students, it is there already. And yes, it is downloadable. More exciting, I have gotten more experts to agree to do a session on private money. So we've already loaded Jason Pritchard's and talked about his deck, his, basically what he uses to raise millions of dollars. It is already loaded. But we have April Crossley, Jonathan Twomley, and Anna Kelly all agreed to produce a video that we will load as well. Again, all of these will be included. I'm not raising the price until I'm done. And who knows, I may be never done, so the price will never go up. So it is there for you in the course, link below, called How to Get Started One Rental at a Time. Today's daily financial news really, for me, starts with Intel and IBM. I talked about them yesterday. They were reporting after hours. I think I called them old tech. I think Wall Street calls them legacy tech. And it's interesting to see what's going on. Intel actually beat top and bottom line. They actually had an interesting thing. They actually had to do their announcement before the market closed yesterday because somehow somebody got a picture of their earnings, or at least a slide before, so they had to release so it wouldn't be unfair to others. It was kind of an odd thing. But anyways, generally speaking, they beat top and bottom. They did indicate that they're going to be leading on outsourcers for the next couple of years. Their goal is to start doing more chip manufacturing internally by 2023. Some people have seen that as, man, they're going to have to do a lot of capital investment, fabs, things of that nature. Again, I'm not a chip guy, don't know, but again, that was kind of Intel. Then you go look at IBM, and man, IBM, fourth quarter in a row of revenue falling, fell 6%. This is, again, their fourth quarter. But what Intel is highlighting is, again, you need to ask yourself if you're invested in the stock or invested in software tech. Is it an IBM thing, which I don't know, probably is, but you have to at least ask. They highlighted client buying behavior has changed. And this is most impactful or hurts software sales the most. I think it was Splunk, just like 2 months ago, missed, and the analyst kind of bashed him because, like, I guess they did a channel check like 5 days before the end of the quarter, and I guess they said everything's fine, but they missed. So again, they're a software company. So I wonder if this is going on in software. I wonder if this is going on in enterprise software. I don't know, but it's worth a discussion because again, client behavior is changing. People are, maybe they're not doing the big contracts. I'm not sure how IBM licensed their software, where it's either it's perpetual or it's monthly. But those are things you need to be asking yourself. Next up, there's a very good chance that the Bay Area or the Silicon Valley real estate market, the balloon is, I don't think the balloon pops, but I think there are slow leaks forming. And that will be very impactful because, again, this prices out here are ridiculous. So, a 10% fall out here could be, over $100,000. And the reason I bring this up is because I believe the industry that we have relied on, tech, is asking hard questions. For example, 25% of tech CEOs are actively considering moving to cheaper locations, actively considering. Again, those are existing tech companies, which I think is kind of like Oracle, right? They make the move or whatnot. Texas and Florida, obviously, being likely destinations for them. Work from home, proving it can be done. Sorry, guys, if you hear Jimbo making noise. He had me up at 4:18 this morning. Yes, this little guy had me up at 4:18. You're lucky I love you. You're a good puppy. Okay, back to the stuff. So again, work from home, all of that stuff. But what I am most concerned about the Silicon Valley, and I've mentioned this many times, is I believe we're potentially losing the destination, right? We are losing the destination for the next startup. And John Chambers, you may not know him. I know him because he was the CEO of Cisco, which is the company I made a lot of money in and then lost it all. His startups are not even considering the Silicon Valley. They're going elsewhere. And if we miss a generation of tech, right? If that next generation of tech goes to Miami or goes to Texas or goes to Ohio, wherever, right? Goes to Ohio, it doesn't matter. That is going to iteratively affect the Bay Area prices, and we may have peaked or very close to a peak because you definitely need your companies to go public to afford something out here. It's ridiculously expensive. And then next thing to look at is CEOs are saying the work from home and the social distancing is impacting employee productivity, and they are looking to potentially go to states where the business climate is more friendly. These are all things that will hurt New York and California without a doubt. And Silicon Valley could be in for some serious, serious trouble. Next topic, we actually did this about a year ago. Remember we talked about the Olympics, the Tokyo Olympics. I was pontificating at the time that I thought no chance it happens. They delayed it a year. Well, it's that time again. So I'm curious what you think. I actually think this time they get it done. There might be some countries that boycott for whatever reason, just because of health issues. But I think Japan is kind of in a tough spot. They've already spent a gargantuan amount of money. They've already delayed it once. Could you do the Olympics with no fans? Oh man, that would be weird, right? Like the opening ceremony with no fans. Man, I don't know. But this is either that or it gets. Oh man, I don't know. Does it get canceled and just delay? I don't know. Really got to think about the Olympics, whether or not it happens this summer. I don't know. Next up, we have more and more Hollywood films, blockbusters being delayed. The one I'm following is James Bond being delayed again. So it is interesting that it is being delayed. Next up, I want to read to you an Instagram post that I put out yesterday and a comment I got because I just want to answer it here. So if you don't know, I have an Instagram page. It is called, shockingly, One Rental at a Time. This was my post. It was just a simple comment. If you can't understand what a bad, average, good, or great deal is, you are going to lose money, right? It was black and purple, and all of those things that make Instagram, my colors, stand out on Instagram. But that was the post, right? Makes sense. We talk about understanding your market. We talk about bad, average, good, and great deals all the time on this channel. Well, a comment came on that said, interesting post. What do I do? Okay. Well, let's just get it out here. You need to do the work. You need to focus. You need to learn your market. It takes time. It's no easy button. I'm not going to do the work for you, but I promise you, if you take the course or you just do the work of learning your market, you will understand average first. Once you know average, you can know bad, good, and great. That's the magic of focus, repetition, 10 to 20 minutes a day. You can do it. Don't just sit on your hands and look at social media. Do the work, do the work, do the work, and you will learn your market. Another couple of things to talk about here. Looks like, you remember oil got below, actually went negative once. Remember WTI went negative $32. That was crazy. Well, it's over 50 now, and we're seeing earnings report from oil services company. The first one out was Schlumberger. They came out, they beat top and bottom, and lo and behold, they're making money because oil is now over, I think it's over 50. I didn't actually check this morning, but they said higher oil prices is leading to profit. Most US companies start to break even at 38 based on historical averages. I do not know where they break even, but again, yeah, they're making money again. Next up, the one that's interesting to me is CSX. You may not know who that is. They are essentially a railroad operator. Why are they interesting to me? Well, they do a lot of movement of goods, and they had a 4% increase in freight. That's interesting, right? 4% increase in freight. That's at least trending in the right direction. That is good news. That's more stuff going more places. And again, they beat top and bottom because, again, more freight equals goodness. This is, again, the signs that I've been talking about it getting closer and closer to the other side. So I'm very excited by that. The last thing to talk about is trading volume. Trading volume, I talked about it a little bit yesterday, but I got more information on it. Average trading volume in stocks in 2019 was 7 billion. Average in 2020 was 10.9 billion. Average thus far in 2021 is 14.7 billion. That's amazing. Let's call it a 30% increase in the 3 weeks of 2021. That's very 99. That's very kind of individual trades, options, things of that nature. And could be the sign that the top is close. Could be the sign of speculation. Well, I think it's pretty obvious it's a sign of at least some speculation. But I look at those numbers and go, wow, right? The 30% jump from from 20 to 21. That is interesting. Oh, thank you, Slumber J. That's who I thought it was, but it just doesn't spell that way. Slumber J. Yeah, you're right. I just didn't want to assume because the spelling is not anything like that. So in the end, that's what I got for you today. Going to be meeting with, who do I talk to later today? Roof Stock at 9:30. We're going to talk about another market. I have no idea which one. He always brings it. And then I think I have an interview at 10 o'clock. So have a wonderful day. I'm very excited to see what April Crossley, Jonathan Twomley, and Anna Kelly bring in their private money sections. They each of them said, or committed, I should say committed, to get it to me by the end of the month. We'll see what happens. All right, everybody, take care. Have a wonderful day. And if I don't talk to you over the weekend, have a great weekend. But remember, we'll be back 7:30 on Saturday and 7:30 on Sunday for daily financial news. Bye-bye.